Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, finance professor at Chung-Ang University. Professor Song, good afternoon. Thank you as always for coming on the program.
Yeah, thank you for inviting me again, and my pleasure.
Well, let's start on Wall Street, where stocks on Wednesday broke their brief rally. All three main indices closing lower. It was a far smaller decline in the end than earlier in the session. Stocks rose towards the end. Why this turnaround in the market? What do you see happening in global stocks?
Yeah, as mentioned earlier in the news, the OPEC Plus and including 13 countries and more countries, they have announced the biggest oil cut since the pandemic. So that is 2 million barrels a day has been reduced. That's why it means that the oil price shock will continue and across the world. And so that's why we have seen that Dow Jones, S&P 500, NASDAQ Composite has shown the declining. Currently, in Europe, the FTSE 100 have remained very. Initially, it has been dropped, but it has recovered, and then it remains the same level as it used to be. But however, in Asian market has shown very strong recovery of the stock. Particularly for Korean market, has suffered so much from during the last month, almost 10.8 percentage point decline of the KOSPI index. So that works as a base effect. That's then, and also with some depreciated Korean currency, Korean won, then the foreign investors, particularly from U.S., this is very favorable investment opportunities to U.S. foreign investors. So that's why we have seen that inflow of the foreign investors in the Korean market. That has shown the surge of KOSPI index recently.
Right. Well, let's focus a little more on Korean stocks. They closed higher today by 1% on the KOSPI and 3% on the KOSDAQ. The KOSDAQ's back above 700 points for the first time in 8 trading days. Strong gains for a couple of names in the battery sector, EcoPro BM and L&F, up more than 5.5% and 8.5% respectively. The exchange rate also coming way down now. Tell us about the domestic market.
Yeah, the L&F and particularly the EcoPro BM, those are categorized as some chemical industry, and particularly they are particularly specialized in producing and providing some cathode materials, which is used for the lithium-ion secondary battery materials. So also, particularly the L&F is included in the exchange traded fund in the U.S. market, U.S. capital market. So they have shown a very quite impressive increase of the stock price movement. So correctly, it had shown that the price has been increased almost more than 3% and almost 8%. And consecutively, and that is very impressive. But the same is also the case to the Samsung SDI and the LG Solutions, who are producing some secondary batteries and also has dealt with the materials of the secondary battery.
Right, and finally, Professor, zooming out a little bit, the World Trade Organization is calling for a major slowdown in global trade growth. It's lowered its forecast for growth from 3.4% now down to just 1%. What's the WTO saying, and what's your outlook for trade?
Yeah, recently, we have seen that some international agencies such as the United Nations, UNCTAD, and also World Bank and the IMF, they have shown that some prospect of the global economy is very bad, and also in regard to that, the world trade is reduced almost 1% increase, or maybe 0%. The main reason is not only the Russia-Ukraine war is continued. The other one is some unexpectedly low growth rate of the GDP in China. Chinese government, of course, has some problem with some property market because of Chinese government is concerned or worried about some debt-driven growth cannot be sustainable. So that's why they have implemented some 3 red lines, which means the debt level of the developer construction companies should remain within the 3 red line, which is a debt to cash ratio, debt to equity ratio, and the debt to asset ratio. That's why the developers cannot build some of the developers cannot complete the residence apartment. So what is of concern lies in that could be contagion and transmitted to some local government financial market, which means the local government relied on this local government financing vehicle, which is a special purpose vehicle, which has financed and funded some development of investment of infrastructure and some sale of land. So that is a potential risk ahead in the future. But currently, I'm not so much concerned about the problem because Chinese government still retain some capacity to deal with and then manage the issue, because the reason they have set up these 3 red lines in 2020, then it became effective, and also it has reduced and declined the growth of the property market and the housing market. So then if that happens, then once it is released, then they could, Chinese economy could be back on the track to the growth once the recent People's Congress has concluded with the continuation of the Xi Jinping's grip over their control power of the Chinese political polity. So to that regard, I think currently almost all the international agencies such as IMF, World Bank they are really worried about their very strong support from Chinese government. That is one additional issue why they have issued so much very gloomy prospect of the world economy. Of course, that could be some positive pressure on the U.S. to stop raising the interest rate, stop continuing their interest rate hike in the future.
Well, that's a great point, Professor. We'll have to see whether and how China navigates that situation. We'll have to leave it there for today, though. Thank you, Professor Soo-young, for making time for our program today. Always appreciate your insights.
Yeah, thank you.